Well, let's dive deeper into Apple. That was the one Mag 7 stock in the red today. The iPhone maker is down 9% already since Monday, pacing for its worst week since November 2022. Morgan Stanley lowering its price target on the stock from $275 to $252, citing the delayed rollout of a more advanced Siri. For more, let's bring in Fast Money friend Gene Munster of Deepwater Asset Management. Gene, after Apple revealed Apple Intelligence at WWDC last June, here's what you had to say.
This is about getting people to recognize that their current phone isn't nearly good enough, and I think that they hit it. This is the biggest day for Apple since the iPhone, full stop.
Do you feel the same way?
I think the biggest day is coming, Melissa, and ultimately this has been a disappointment in terms of the rollout of Siri. It's as big of a disappointment as covering this company and investing in it for 20 plus years that I've seen, a 1 year delay on something that's so critical. And so I don't want to pile on to the naysayers related to where this product ultimately can go, but to answer your question, as we stand here today, very different place than what I thought we were going to be at back at WWDC. At the end of the day, the question still is relevant, is will they get Apple Intelligence right? And as it stands, they're essentially just holding on too much to how the whole ecosystem that's powered by Apple Intelligence is put together. They really need to expand it, allow developers more to build onto it, to accelerate the features. When I made those comments before, it was a belief that they would be in a unique place to bring personalization and automation to a device that are over 2.3 billion active devices. So that central view is unchanged, but it's going to take much longer than what I thought. I do stand by this belief that a year from now, we're going to see meaningful acceleration in iPhone on the back of these new features getting rolled out.
I was curious about how Apple was valued, because I think there's a question here in this kind of market environment. Are you overpaying for Apple given its delay in AI features? Pre-WWDC, so just before June or so, it was trading at a 30 PE. Right now it's trading at a current 34 PE, not forward PE, just PE. So, I mean, just on that basis, how should we think about it? Is Apple still worth more than it was worth before the announcement? Should it actually have even more of a discount than being having to go 4 turns lower to go back to pre-WWDC because it's sitting out as, for instance, its competitors in China are launching phones that are, the same price point or lower with AI features?
So I think the multiple's in the right place, and I think investors are still giving Apple largely the benefit of the doubt in terms of how they can roll this out. So I think an above average multiple is justified just given how important these products are. They're not going anywhere. People are not going to get rid of their iPhones, for example, if an Android phone comes out with some impressive AI feature. And so that lock-in is really valuable to investors. They can sleep well at night knowing that the flywheel is in place. And so the multiple makes sense to me. The move higher in the stock here has to come from the substance of these features driving revenue and ultimately earnings. And when I look at that, I mean, that's the question. I'm still optimistic, still positive, still own this stock on a belief that the iPhone estimates for this year are conservative. The street's looking for about 1% growth, steps up to 6% for calendar 26. So it's a nice step up. I think that those are probably conservative. But to answer your question, I do think there is some benefit of the doubt that's being given right now. But I think the upside in the stock comes from earnings upside based on, in part, these features. But also keep in mind, there is this huge upgrade pool that is ultimately going to have some positive impact this year and next year.
Hey, Gene, it's Courtney here. So just geographically, where should we see that growth coming from for Apple? So there's been a lot of disappointment when it comes to China sales, and I know there is some optimism with some other emerging markets like India, or hopefully we'll see that pick up in the U.S. But also with tariffs ongoing, is that going to be an effect for Apple, and how should you look at that as an investor?
So a couple topics on maybe start with the latter. On the tariff side is I think that they're going to sidestep these tariffs. I think Apple's announcement about this $500 billion investment into the U.S., it wasn't all incremental. It was probably more like $30 billion was incremental. But I think that was the politicking around this. And I think that Cook and Trump are in a good spot. So I think that Apple will find a way to avoid these tariffs. As far as where the growth comes from, the China piece, it just doesn't impact Apple. It impacts Tesla, too. I mean, those two hardware companies, you're seeing this move to buy China, this nationalism, consumer behavior. That is, I believe, in part fueled by some of the messaging from Chinese leadership. And so I think that that's going to be a harder one to turn. Where the upside comes from, it's the old strengths of the U.S., Europe, and to a lesser extent, India. It's about 3% of revenue today. I think longer term, that can be 10% of revenue, and that's just kind of a slow build.
Gene, we're out of time, but I got to ask you this one question. This is the question that we were sort of bandying about on the desk just before going to you, and that is, if the Mag 7 came out and said we're gonna trim our capex spend for the year because of macro uncertainties, et cetera, it's just a prudent thing to do at this point. Do the stocks go higher or lower in your view?
I think measurably lower. That would be a very bad day for these companies and a bad day for the broader AI trade. I think it would take many quarters for investor psychology to recover from that.